Greta Thunberg, Donald Trump, both are scheduled to attend the annual World Economic Forum meetings in Davos, Switzerland, which are getting underway Monday. Now, sustainability and climate change are the main topics of the meeting. Activists like Thunberg are putting more pressure on governments and business leaders to do more in stopping climate change. The forum is introducing a scorecard this year to rate companies on how sustainably they act. Now, ahead of Davos, American money management firm BlackRock has grabbed a great deal of the attention of the finance world. Its CEO, Larry Fisk, announcing that the company would, quote, exit investments presenting a high sustainability-related risk, end quote. For a start, divesting hundreds of millions of dollars from coal-linked businesses. Now, that could be a big deal. BlackRock is the world's largest fund manager. It holds close to $7 trillion in assets. To put that in perspective, Germany's entire GDP for 2018 was closer to $4 trillion. Now, managing that amount of money means a correspondingly high level of influence in the corporate world. In Germany alone, BlackRock counts as the biggest single shareholder in the following DAX companies: Siemens, Merck, Bayer among them. The question now, what could its decision mean for the broader world of finance? And for more on this, I'm joined by Sasha Stephan of the Frankfurt School of Finance and Management. Sasha, it's good to have you with us. This would seem like quite a momentous decision from BlackRock. Can you shed some perspective on this? How big a deal is it?
I think, first of all, it's I think it's a big deal that BlackRock now joined also other companies, banks, insurance companies, and trying to take specific actions. The question is, on the one hand, how they can do it, and are they actually going to follow up on that?
What?
So I think the question how they can do it, on the one hand, they could, as I said, divest investments, but the amount of assets, out of these 7 billion, 2 billion are actually actively managed, right? They can actually do that. The rest is so-called passively invested, and this is very difficult to divest. So another important or potentially important activity would be to vote, even with these passively held stake, and say, support these climate neutral, climate-friendly actions, which they actually have opposed during the last couple of years.
Has BlackRock suggested with its new strategy that it might actually vote on some of these companies?
I think the question is, are they going to do that, right? Because on the one hand, this new approach, or what we call being there not only for the shareholders, but for the stakeholders at large, meaning also the environment and other stakeholders, mean a complete shift from this shareholder-focused model. And the shareholders are usually also focused on more short-term gain rather than the long-term perspective. Though the question is BlackRock actually going follow through? And then more broadly, what is actually the best or most efficient way to address these climate change problems?
Sasha, is there any sign that other major fund managers, such as Vanguard, could be taking a similar position?
Oh, I assume that once one manager started, the others will definitely chime in. And we see also that not only the asset managers, but also insurers, banks are thinking more carefully about how they employ their capital. But I think more largely, and the bottom line is this going to be enough? Is the private sector really equipped dealing with these large and important issues? Or should it be, and this is actually my major point, it should actually be governments dealing with the problem which affects society globally.
All right, Sasha Stephan, professor at the Frankfurt School. Thank you very much.